Good day, this is Joseph from Bitcoin Bounce. Today, I want us to share a video together with Steve from Crypto Crew University, and he was interviewing Jason Pacino, and they had an excellent strategy of how they're buying into the market as Bitcoin is kind of in this consolidation phase, and they expect a 50K Bitcoin pretty soon. So I thought this is going to be really good information for us to go through today. So enjoy this video with me.
Welcome to the show.
Thanks, Steve. It's an absolute pleasure to be here. Big fan of your channel too.
I appreciate that. Jason's going to share some very interesting insight today. He's going to talk about where he thinks this bottom is. This is a hotly debated topic and quite controversial one. And he's going to share some 4-year cycles and potentially even some 18-year cycles that he sees playing out. So we're very excited to have Jason on the show.
Thanks very much, Steve, and thanks for having me on the channel. I look at it just like a bit of a conversation around it because you know as well as I, when you've been in the game for so long, you can have a fair idea of where the bottom is going to be, and that allows you then to assess your risk and assess your reward. And so that's when you start to get into the market. And so if you've got that bit of a road plan, then you're basically setting yourself up for success in the future rather than just trying to say, no, the bottom's got to be 10, it's got to be 12, it's got to be 6. I think that's a bit of a fool's game. And hopefully, the guys that are watching now have been through the tops of the bull market, they're going through the bear market, and probably we're into some sort of accumulation area now. And so they're starting to realize that all of these ridiculous calls of it has to go to a particular number are basically setting anyone else up for failure. And we will 100%. That's something that we can guarantee as traders, is we will guarantee that we'll hear those calls again, when the next cycle comes. It's just human nature to want to hear those sorts of things.
So where are you in the debate of the bottom is in, the bottom is not in? What's kind of your pulse on this? And do you have a chart that is one of your favorite that says either the bottom is in or the bottom is not in?
Yeah, all right, let's bring up the charts. Excellent. Well, what I've done is just go back and look at the previous cycles, and I'm sure a lot of people can understand that we only have a few data points to work with. So although it can be a really good period of buying, there's no guarantee that it has to happen like this. I always like to preface it with that because at the end of the day, we're just traders assessing our risk and reward. But this particular chart here, which I've just scraped right down, just so it's the most clean and simple way I can look at it, it's just going from each of the cycle lows to tops. And so that then brings up the other question, which we'll look at later in terms of timing. And that's going through the 4-year cycle. So we go from bottom to top, and then we had about a 12, 15 months to the next low, an accumulation period. And each low looks slightly different with the odd spice of black swan events thrown in there for good measure. But essentially, this simple area here between low to cycle top, and then we've used our fib retracement tools here. So there's the top, bottom, and just looking at 25%. So it's basically a 75% down all the way down to 87.5%. So these are particular numbers that Gann used. So I do a lot of, all of my trading and investing is along the lines of Gann analysis and also Wyckoff analysis. So if you're unfamiliar with that, anyone that's watching, we can talk about that later, but essentially that's what I work with. It's over 100 years old. The analysis continues to work time and time again on every single market in the world. As long as you've got a chart, you can basically forecast particular points in the market where you could expect turns. And so that's what I'm doing here with the particular low zones. In this case, the previous bottom around the 2015 low happened to be a pretty good zone between $150 to $300. The next cycle we had was from 2015 up to the peak of 2017, so late 2017. And then as the market fell, you can see we had the same sort of thing, low to top, retraced 75 to 87.5%, and that gave us a zone of between $2,600 and $5,000. And so the market dropped nicely into that zone there. We had the black swan event, dropped into that zone again before the next cycle picked up. And so that's where we currently see ourselves. Bottom, 3,000 to the top, 69, 70,000. And we've dropped into that zone, just touched it. So we could basically say that we're in this zone now of a good buying opportunity, but that doesn't mean that we can't go any lower, down to about 11. Maybe we go to the tops of the previous mini bull market of 2019, to around 13K or 14K. But really, I think this is probably the zone that we will eventually look back on and say, well, that was the bottom for Bitcoin, whether it's June low or October low, as we saw on the futures market chart, which October is the main low and June wasn't the low. But either way, when you look at your bank account for profits, it doesn't matter. It just matters where you buy and where you sell, provided you're making profits. I know everyone wants to get caught up with is this the low? Is that the low? I mean, it doesn't matter at the end of the day in your bank account. You just want to see the profits. So overall, I'm looking at this as being the period, and it also then lines up now with a cycle bottom in terms of timing. Just looking at those previous 3 years up, 1 year down, roughly speaking. So it's kind of where I think we're at now. And that's why I'm looking at now as good bottom opportunity for at least dollar cost averaging in for Bitcoin, specifically Bitcoin, and not the other cryptos just yet.
I love this. What would you say to somebody that's watching and maybe they haven't gotten in, they're waiting for lower in your box? What would your recommendation be to them? Are you dollar cost averaging in now? Are you waiting for lower? And what would your recommendation be to somebody who's not quite sure? Maybe they're waiting for just a certain number in their head, and if we hit that number, they're going to buy, and if we don't, they're still going to wait.
I mean, if that person was around at the peaks, which I think a lot of people have been from the bull market tops, we just have to remember what happened at the tops. It was everyone calling for 100K, and that's where everyone thought that's where they're going to sell out at. It's if it reaches 100K, I'm going to sell. So if that happened to be the case, then if you do the same thing at the bottom, you can basically repeat the same mistakes at the bottom. If you're just waiting for that, the 10K to be hit, what happens if it doesn't get hit? So something else that we look at, it's a pretty old strategy, but it works time and time again, is just look at something like a pyramid, and you just want to get into the market in a pyramid strategy from these low areas, which you've identified based on previous cycles and whichever analysis you choose, Gann analysis or Wyckoff or, whatever traditional TA. But essentially, you've got a certain bag you've on the side, $1,000, $10,000, $100,000. Maybe you just chip in at these top areas. In the case of $1,000, you're just doing $50 every time it drops into this zone on the weekly. If it drops into the next zone between 14 and 17K, do $200. And if it drops all the way down between 10 and 14K in the bottom, go in even heavier. So you're essentially just looking at it like a little bit more, and then, go all in, sell all your crap, get rid of your car, do all that sort of stuff if you think that is going to be the ultimate low. And if it happens to go even lower, provided you're still in a macro bull market, then choose something else to sell. Sell your kids, your wife, your livers, whatever you got available to you, if that is part of your plan, So that's another way. If someone, like you said, if someone doesn't have any position at the moment, then at least start to set up some sort of pyramid strategy where you are managing your money and managing your risk to the downside, manage how much you're putting in at each particular level to the downside, so that you're not just waiting and hoping for the low in case this is the low, 17 to 18 grand is the low, and that just sort of takes off without you.
Given this chart, given your knowledge and expertise, and given the fibs and the Gonfan, what would you say is a possibility, like in percentage wise, that we fall below 10K? Is it like, hey, there's a 5% chance or a 50% chance or a 90% chance?
Good question. Under 10 grand, that would imply that we would have to go beneath the August-September low of 2020. And I like to use my Gann swing indicator here. So this was a significant turning point in the market that tested the previous triple top. So this is something that was very, very significant back in 2020. And so I think if the market was to break down from that, sure, you could be buying a lot of cheap Bitcoin, but that would imply that we're going to be spending a long time underneath these levels. So you want to see the market go low enough so that you can buy as cheap as possible. But then there are significant pivot points in the market that if they're broken, it basically destroys the structure of the market and you're in a pretty poor position for a longer period of time. So there's no real rush. To me, I mean, to answer your question in terms of, what's the percentage, honestly, I don't know what the percentage would be, but I think it's going to be quite low at this stage. And it's not something that I would want to see for a renewed bull market in the foreseeable future, as in, 2023, 2024, we start to take off. I think if we were to break down into this zone, then that's just going to set us up for a lot longer of a bear market. So, we could assess that if it gets to that point. If it gets there, I think you've got a lot of time.
I like that analysis, and hopefully this reaches some ears where it could help some folks, because I think
Sure.
the majority of people are waiting for below 10K, because
Really?
I think that's the pulse of the crypto community, given the state of the global financial situation, and everyone's take is, this time is different. But yeah, sub 10K, I think a lot of people are not in the market and they're waiting for sub 10K to get in. And I stand on the fence with you, saying those people may unfortunately buy back in at 40 to 50K.
Yeah, I mean, you know the deal. Like, you look at the risk and reward, you're getting it at 19 or 20 and it gets to 10, sure, you've lost 50%, but that's like a normal Bitcoin bottom. But to then lose from 20K to 30 or 50K, like that upside, you're sort of letting a pretty good opportunity go to waste just because you want to be greedy to the downside, just like the possibility of a lot of people being greedy to the upside. And look, we could go to the macro side of things here, which leads quite nicely. Thank you for that segue into the macro look at what I'm seeing as an 18.6 year cycle. So this is quite a big thing in looking at real estate, land values, and piecing together with the stock market. So I know a lot of people may never have heard of the 18.6 year cycle before. I'll bring this one up. You can see that now. You can see that. So this is an economic cycle. It's not to be confused with layering it over the top of the stock market exactly, or on top of the land market exactly, but it has more to do with the land market itself. And there's over 200 years of data on this particular cycle. If we just break it down nice and simply, if it's the first time people have seen it, essentially there's approximately 14 years up and about 4 years down. And so it kind of works in nicely with what people already know about the land cycle. With property, people think it doubles every 7 to 10 years. So you get a couple of these moves up. So within this, we've got the second half to go. So basically we're sitting somewhere in this middle part. We've had C-19 pandemic, we've had the inflation stuff this year and interest rate rises, et cetera, et cetera. We're basically within this zone in the middle of the chart. I don't know if you can see my cursor on that as well.
Mm-hmm.
Yep, so right in the middle here where it said 1961, 1981, 2001. And then this is the stage that we're into, that will be leading into in 2023, 4, 5, 6. And so we'll get a peak somewhere around 2026, maybe slightly earlier for land, maybe slightly later for stock market, maybe it extends another year or two. We'll have plenty of time to see as that top comes in. But layering this on top of Bitcoin, we're just going back to saying that hopefully Bitcoin has another leg up. I still see another leg up before we get a big catastrophe for Bitcoin, and then Bitcoin goes into a multi-year bear market. In the past, we've had one straight year down, we've had accumulation, and then the move up, which you then look back and say, well, the accumulation was part of the bull market. You can call it an accumulation and not count it as the bull market, either or, basically counting from the low. Last time it happened as well, you had about 8-9 months of accumulation, total of 3 years. We had a little bit of a low here, and then again a few years to the run up. So I think that is we still have one more of these legs to go for Bitcoin before we get a multi-year bear market where there might be a bounce in the middle like we saw in 2019, and then we never make it higher. We just start to drop out. That could be this cycle as well. I think I've seen one of your videos where you mentioned maybe we get a double top. Maybe that happens in 24, 25, and then we start to fade out from that point. I think there's still at least one more cycle left in Bitcoin, and it sort of lines up pretty well with this 18-year cycle, which also lines up with our commodity cycle, land cycle, stock market cycle, everything heading up towards 2026 before we get the GFC style crash that follows after 2026, 2027. And that can last about 3, 4, 5 years. So that's going to be the tricky point for the economy, the stock markets, the land markets. So people that are thinking that now is the inevitable major crash, I think are going to find that that is not going to be the case 6 to 12 months from now, and will start to reverse and head up with each of these little dips. They're saying, oh, it's going to crash. But before they know it, it's end of 2023, and, we're started to regain some previous higher levels, and they all just sort of flurry in 2024, 2025, 2026, and that leads to those peaks again where everyone misses out.
Very interesting analysis, and we share a lot of similar views. I think it's a sexy topic, when bottom, but I think the bigger picture is markets always take a longer pause after a period of intense growth. And I think everyone can agree Bitcoin has had an intense period of growth for over 10 years. And we could be range bound between 70 and, let's say, 10K for the next 5 to 7 years. That's not out of the question. And we could even make a lower low than this pivot low a few years from now. We could go down to 10 or 13 or whatever the case may be.
Like that.
Absolutely.
Yeah.
And that would catch everybody by surprise. Everybody would capitulate. They would give up. And then it would refresh again, and we would be in a new 10 to 13 year parabolic move to the upside, which is going to be nowhere near the first one, but still very healthy growth.
Yeah. And I think people just, like you said, capitulate, give up, because they don't see it moving anymore, and it's dead. There's no use for it. The same old stories come up time and time again. And it's not only Bitcoin or crypto. You've been in the market long enough. You know how it works. So they'll just say the same thing about the stock market or real estate. It's like, it's not happening because people can't afford it, or the next problem, or the next problem, or the next problem. And it's like the cycle just continues to repeat time and time again. All we have to do is look back to the previous cycle and the cycle before that, and 100 years ago, 200 years ago, it's like the same thing every single time. But there's always that same wording. This time is different because, insert X. Some new technology, some new thing has happened. The government's never done this before. These particular scenarios have never come together at this particular point. And it's like, yes, it didn't happen in the past either. But here we are. The cycle continued on. Profits were made.
This time it's different. That's the most highly reoccurring comment I've seen in all of the years on YouTube. Time and time again, people love to comment that on my videos. This time it's different, Steve. You can't compare this cycle to the last. You can't compare this to this. This time is different. It's unfortunate. I think investing is a game of controlling your emotions, and investing is a game to sticking to the facts and the charts. And it's a tough game. It's the reason most people will lose their money, unfortunately.
It's very interesting when that's said over and over again. This time is different because of the different scenarios coming together. But I mean, looking at a chart, it's like the same thing happens time and time again on a chart in pretty, forecastable cycle points. I'm never going to get the exact low of the date and the time, but generally speaking, you sort of get to those cycle points every single cycle, I guess, the lows and the highs. Do you tend to do that in your analysis as well? You sort of look at the timing of cycles?
Absolutely. And for me, if news didn't exist and social media didn't exist and humans were able to control their emotion, then everyone would be aligned. Like, these fractals are repeating. This repeats. Let me do this with my money. But the media portrays it in a story way that this time is different, and they convince everybody this time is different, and then everybody starts piling on. Yeah, this true. This time is different. And unfortunately, the high majority lose money in investing time and time again in every market on planet Earth for all of human history.
It's an interesting. I've said interesting a lot. It all is interesting, which is, I guess, why we're investing full time, because it's just so fascinating to continue to learn in this space. Looking at the psychology of why people want it to be different, I think it's like, you just want to be part of something that has been different in history. We just want to believe that, no, this time is different because we are here and it was our parents, our grandparents, or great-grandparents last time. And this is something new that's happening to us. And it's very individual to us. So it has to be different. And, like the old esoteric teachings are, it's like there's nothing new under the sun. It's just the same thing over and over again, which seems kind of boring and strange to be a part of as humanity. But I mean, look, we're in the game of investing, and if that's happened to work and we've found it working, we've got to use it to our edge, because a lot of people don't believe it.
Yeah, it's the power of the mind. That's what it boils down to. Can you control your mind, and can you control your emotions? If yes, this is going to be a pretty fun game to play. And if no, it's going to be really stressful. It's going to be a constant battle, and it's going to hurt.
Definitely can hurt, and you can repeat those lessons time and time again, but hopefully you're here in the bear market, you're watching it in the bear market. There was almost no one here, I remember, in 2019. So at least you've got that up on the next unfortunate, and I know it sounds really sad, but there's going to be an unfortunate crowd of people that come through in the next cycle because they thought it would be different. And look, unfortunately, you're going to have to sell out to those people and take your profits, because at the end of the day, most of it is a zero-sum game. Not everything in the world is zero-sum, but if you're going to be taking profits, the cycle will repeat, and that we can be assured of.
So Jason, reverting back to the 18-year cycle, I have a question. So that's in terms of real estate. Is that real estate globally or real estate in Australia?
Good question as well, because that does come up a lot when I talk about it. It's primarily focused on the US housing market, because the US is the biggest market in the world, most GDP, the most money is there. So, we've heard that saying before: if the US sneezes, we all catch a cold, the rest of the world. Maybe the US people haven't heard that before, but that's pretty much what we hear all the time. So in terms of the cycle, the housing market is based off the US. And I get that question a lot. People say, well, what about my area? It's different where I am, et cetera, et cetera. It's mostly focused on the US, and the US is connected to everything else around the world. So we're all within global trade with one another now. Like, we all know that. We've seen it with the pandemic. Everything is basically connected, especially in Western developed countries. Now, of course, it's not going to relate to maybe a specific town outside of, Bangkok or Chiang Mai or something like that in Thailand. They might have their own particular market, but broadly speaking, it is the US, Australia follows, New Zealand follows, Canada, UK, Western developed, Singapore. We can go into some of the, Western European countries, etc. You get the point. So that's what it's focused on.
Did I hear you correctly? I think you just blamed COVID on the US. You said if the US sneezes, everybody catches a cold. I just want to, it could be in the comments, Jason. I don't know.
Yeah, definitely just cut that, splice it up.
Yeah, we're gonna run with that. I'm pretty sure you just blamed COVID on the US. I just wanted to clear the air. Yeah.
Definitely wasn't China.
Yeah, it's for sure it's the US. So I loved our discussion today. I think hopefully this helps people. I think a lot of people are on the fence right now, and they're just waiting for that number that everyone keeps saying and chanting. This number is coming, this number is coming. So I'm on the fence, and I'm sure after hearing you today, you would agree. I'm on the side where it's like, it's more risky to be out of Bitcoin than to be in Bitcoin right now. There's a higher risk to be out.
Agreed. And I think that 10K thing is probably, no, I'm not sure, but probably like the 100K thing. It's supposed to go to 100, didn't happen. It's supposed to go under 10K, we'll see.
Yeah, it's going to take some months to see. And my biggest fear for those people that are relatively new to trading is just waiting for that number, because I was that guy. I was that guy before, waiting for the number, had my head in the news, and I didn't know what the hell I was doing. But in my mind, my ego told me I knew precisely what I was doing. And the ego got in the way. And I hope this video and your knowledge and your information wakes at least one person up. And they're like, you know what? I listened to this Jason guy. I'm going to go subscribe to his channel and I like what he said. I'm going to buy a little bit of Bitcoin. So I hope that's the case from today.
I hope so too, that they have their plans, they do what they need to do. And I liked your call, going hard at that 17.5K low. I think even if the low is slightly lower, it's 14, 15, 16K, it doesn't matter. I think, calling around that low, I think it's an amazing job with your analysis, Steve. And people they'll come at you for sure if we go to 16 or 15K, but your analysis is really, really good, and I really do enjoy watching your channel.
Thank you, guys. Dion is away today, so he's going to be back tomorrow morning. Then we're going to look again at the Bitcoin analysis, and he's also going to give us another trade for the day. Have a wonderful day. See you tomorrow.